Welcome back, everybody, to another episode of Recruitment Uncensored with me, your host, Kate. You all know who I am by now. Unless you're a new viewer, actually, you wouldn't know who I am, but now you do. I've got an amazing guest on with me today, Vincent Sadin from Simplicity, who we've just been having a lovely chat about life and exciting things for the last half an hour, haven't we? We probably should have gone live half an hour ago.
We've talked nothing about cash. We've talked about us and our exciting plans ahead.
Yeah, there's nothing about cash, yeah, but still interesting. But what Vince has come on to talk about today is about cash is king, protecting, empowering growth and recruitment. And I'm really pleased. I didn't suggest this theme, by the way. Vincent brought this to the table. I think it's a very important and timely topic for us to be talking about today, because any of you watching who do have your own agency, your own business, with the way our times are, cash flow, the growth of your business is absolute priority. So everything we're going to cover off today is going to be really helpful. Before I get stuck into the first question, as usual, you can drop in questions, comments, and we can discuss. I'm going to bring them up on screen. Any we don't have time for, we'll jump in the group after and answer it anyway. So anything you want to ask Vincent, or anything that you want to bring into the chat as we're talking, do so in the comments. But yeah, let's get cracking, because we can both chat for the world, and I want to make sure we can cover everything off in 30 minutes. First question, what do you, because you obviously speak to and deal with loads of different agencies, right? So what do you see as being the typical cash flow challenges that show up in a lot of recruitment agencies?
Yeah, so cash flow is one of the biggest challenges we see, specifically in the recruitment world. But it's not just in recruitment. Cash flow is key across every type of business. And it's about having a healthy incomings and outgoings so that you keep a bit of a float in your bank balance. From a recruitment perspective, because the agency is a middleman, so to speak, you've got the workers one side and the client the other. The agency is responsible for forking out for that weekly payroll for their workers. And 9 times out of 10, the end client is demanding payment terms. And those payment terms can be anything from 30 days all the way up to 90 days. And if you think about, by the time the workers have gone out to work, and the agency has bankrolled them, so to speak, and paid the workers on a weekly basis, by the time it gets to that first invoice being due for payment, 30 days at least has gone by. 4 weeks worth of payroll has been paid out by the agency, meaning that not only do they have a tight cash flow, but they've also increased their risk, because if the end client doesn't pay them, it's tough, really, because the workers have been paid for what they've done, quite rightly. But the agency in the middle has grown a cash flow, and also they've increased their risk as a business. So quite often, a tight cash flow is discovered as a bit of a shock by an agency, because not only have they got to pay the workers, they've also got all the running costs that are required for the recruitment agency to be able to deliver that work on a weekly basis.
It's actually mad when you think about it, that what other industry is there? Well, there probably is one, but I don't know what it is, where that much is given in advance of being paid. Like 90 days is it, like even 30 days, right? But that, it's insane, isn't it? That massive gap. And when you're a small agency, that's sort of a shit your pants moment sometimes, isn't it? When you've got that much money going out and you haven't got it coming back in. Like, what other sort of industries work like that, where you're not being paid for so long sometimes, are you?
Well,
Loads
I
of people
think
have
recruitment
in other industries.
So recruitment, I would say, is probably at the top of the list. And then you have courier industry, so courier drivers, self-employed, engineering. There's also various different parts to construction, when you are supplying goods from a client to an end debtor, and then you've got the payment terms in the middle. I think it's pretty across all industries, there would be an element of this, but in those industries, we seem to see it a lot more because of the demand from the end client. There's also quite a lot of payment terms required in retail. If you think about providing goods to resale, they will then have long payment terms for the goods. So yeah, I think it's pretty common across all industries, but in particular recruitment, we see it a lot.
Yeah. So, would you say, I know you were making reference there to more the temp side of things. Would you say that's where you see the cash flow challenges show up the most in the agencies that have got that temp side of the business, or they're just purely temp?
Not necessarily, no. I mean, this also is a problem for perm agencies. So if you think about the process that a perm agency follows, from the very beginning of having a conversation with a client, understanding their needs, the team that they're looking to recruit into, and the role that might be available, the time that then is taken to start looking for potential candidates, creating a shortlist, interviewing, then introducing them to the client, then they might get an offer, then they've got a 3-month notice period. If you add all of that together, it could be 6 months from the start of doing a piece of work for a client to even raising an invoice for that candidate starting. 9 times out of 10, perm placements, you don't invoice until the candidate has started. So you would raise your invoice on day one. In most cases, you would have a minimum of 30-day payment term. And by that point, you've done all of the work. So your cost of sale has been completed, but you've had no money incoming. So from a perm perspective, you've got to think very strategically about what work you're doing and when, so that you can then plan when your invoices are going to be raised.
I was going to say when those invoices are going to be paid. Yeah, I think I've always really respected temp agencies because of, at least with perm, you're not paying the worker in the gap. Do you know what I mean? So with temp, I always really respect that added. I see it as an added responsibility and added pressure to manage that extra level of cash flow, because especially if you're a small agency, it's just another massive consideration that you've got to bring into your business, isn't it?
Well, also, if you are an agency that pays workers via PAYE, you've not only got the cash flow restraint there, you've also got the cost of payroll and holiday pay, VA, it all adds up. The amount that you might be bankrolling that you then put on an invoice to your end client is significant. And if you think about that happens every week to build up to your end invoice. So yeah, it's quite significant.
Yeah. Okay. So wanted to ask you next, because I suppose for a lot of people this is again a pain point or a consideration. How can agencies scale their funding as they grow?
So I guess really this is a solution to the problem that we have just spoken about. Tight areas in your cash flow requirements, where you've probably not got money in for outgoings that you've already had an outlay for. There is a solution to that problem, and that comes to fund the gap. There's various different options that businesses can take. You've got the option of invoice discounting, factoring, recruitment finance, and that comes from various different options. You can go to specific businesses that offer this support, like ourselves here at Simplicity. We provide recruitment finance and back office, so we fill the complete gap, all the way through to your high street banks, and they would look to offer a funding line. So what I would say, being in the industry, is looking at what options are available and choosing the option that de-risks the process for you as an agency. B, it plugs the gap from a funding perspective. But C, it also does the bit that you don't want to do or you're not good at.
Yeah.
And it's a bit like recruiting a new team. If you are going out to recruit somebody into your business, it's highly unlikely that you'd want to recruit someone like you because that's not going to fill the gaps that you might have in the day-to-day operation. So from a scale your funding perspective, have a process to follow. Choose the right option that's available for you. To give you a bit of an example, one of the options that's available is pure recruitment finance and back office. So when we spoke about agencies looking to place workers and paying them on a weekly basis and then invoicing the end client, there is a solution available to those agencies where you can partner with somebody like ourselves here at Simplicity. And I don't want this to be a sales pitch at all. It's just to give you an idea of what is available. What you would do is you would work with somebody like us. You would go and do what you do best, create the relationship with your end client, identify possible vacancies, fill those vacancies with great workers, and then we do the rest. So you would add your client to our online platform. You would then put all of your worker details on. You would submit client-approved timesheets into the system, and then we would deal with the rest, whether they are PAYE, contractors, limited company, working through umbrellas, etc. And then at the end of that working week, you would receive your margin, your worker would get paid, and an invoice would be raised to your end client. So your complete back office is taken care of for a very small percent of that end invoice to your client, which means that you can budget in a way that you can scale sustainably and know that your funding requirements are taken care of. And then the best thing on top of all of that, you would receive bad debt insurance. So you are de-risking your cash flow as well, because unfortunately at the moment we are seeing a huge amount of end clients going insolvent. We were talking, Kate, before we came on, weren't we, about where is the incentive to set a business up? At the moment it seems to be take. And when you add all of those outgoings up, some clients just can't do it, which means they become insolvent. And that then is a huge risk to the agency because they've paid the workers, but the client can't pay them. So where do you go from there unless you've got that
I know,
insured?
I've heard stories like that before as well. It's just horrific, isn't it? Like, what would you do?
Well, you can't do anything if you've got no insurance. You can try and get that back from the end client, but if they've become insolvent and they're going through that process, it's very unlikely that you're going to have that debt covered.
Yeah, I think the bit you said there about the things that you don't like to do, like think about the things that you don't like to do. I think we forget. I think when you've got a small business, you feel like, well, I should just do everything, but actually, there's meant to be some enjoyable parts to it. So, like if there's things you don't like to do, say payroll's one of them, why not outsource it and get somebody to do it that likes doing it, is skilled in doing it? It's like why I've got an accountant. I know people that do their own books and stuff like that, but I don't enjoy it. And to be honest, I'm not confident enough with doing it. So I'd rather somebody else that knows what they're doing does it. And it's quite an important bit of the business. I don't really want to get it wrong.
Absolutely. And I'd love to hear from any recruiter that can tell me that they love filling in spreadsheets, doing admin, filling in CRM systems, because it's just not what we do. We're salespeople at the end of the day.
Yeah, I know the temp agencies I go into, or the ones I've spent time with in the past, where payroll on a Monday is like, oh, I don't. No one enjoys
talk
it.
to a recruiter on a Monday, Tuesday, or Wednesday. Only speak to them on Thursday afternoon or maybe Friday morning, because Friday afternoon they'll be in the club.
Yeah. No. Okay. So, how can I actually had a chat with somebody today about this, where they've got a newer agency and this financial risk thing came up, and it was a point where it was like, are they going to pay, for a good few months? Horrible, like just not knowing the financial risk of the client. So this is a timely question. How can agencies assess that financial risk of new clients? Because this is a big one, isn't it?
Yeah, it is. And there's several ways in which you can do that. I think first and foremost, you've got to take a bit of an assessment yourself in terms of the conversation that you've had. I always say, without looking at the credit risk platforms and speaking to somebody like us, trust your gut feeling. If your gut feeling is telling you at the beginning of your relationship with a potential client that there could be risks ahead, don't be a busy fool. cut your conversation, your relationship at that point, and move on to another client that you think
Yeah.
is going to fit your ideal client basis. And then on from that, there are so many different layers of assessing the financial risk with new clients. It's difficult if you are dealing with a business that's very new. So if you've got a client that you want to onboard and they haven't been trading for very long, you haven't got any trading history. You wouldn't be able to get any trading risk information from third party companies, etc. So that ultimately has got to come down to your relationship, and you might want to put layers in place to guard your risk. One being that you don't have long payment terms. So if you're dealing with a customer that's very new, you might want to have shorter payment terms, get them to pay a few invoices, and then maybe look to offer them longer payment terms. If you're looking to do some business with a client that is a little bit more established and there is trading history, then you would be able to get information in relation to how they've performed. Are there any risks or red flags that you need to be aware of? And look at the people who are operating behind that client. So you can get some of this information free of charge by just going to Companies House, having a look at who the directors are. Have the directors been
Filing
directors of,
history.
yeah, absolutely. Have they been directors of several insolvent businesses? Because if they have, it's highly likely that that might happen again. And then you can use people like ourselves. So we have a huge amount of data and insight that we're able to rely on to create a risk assessment on end clients. So every client that our customers trade with, we will complete a huge amount of due diligence on that client. Who are they? What do they operate in? What credit limit are we happy to provide? What terms of business are you going to be working to? You name it, it's covered. And that's all included in the process that we follow. So there's various different ways of doing it, but I would definitely say do it. Even if the client comes along and is dangling a carrot saying, I've got all of this work that I would like to
That's the
give to
tempting
you,
thing, isn't it?
it doesn't mean that it's good business. Good business is only good when it's going well and the bills are being paid.
Yeah, and this is the conversation I've had today. It was, newer agency obviously wants to grow and get the business up and running and cash flow in. The carrot dangled, but it's not always, like you said, good business. And without doing that financial risk, I've had it happen to me.
Mm.
And I asked for upfront payment. So luckily, most of the time I've not delivered any work, but still, you bank on that coming in, and people all of a sudden disappear off the face of the earth.
Yeah, and it's a horrible process to have to follow, chasing people for money. It creates an awkward feeling, especially if you've got or trying to create a good, healthy relationship. I know this isn't quite the question you asked, but kind of leads on from here is to think about your credit control as well. So that's really important when you are dealing with several clients and several invoices that you might be raising to the end client. That actually can become a full-time job itself, chasing of invoices. And it's not straightforward because you've got payment terms that you're adhering to. You might also be working through a neutral vendor, which means they have their own portals that you have to work through. And then the client might come back and say, hang on a minute, you need to credit that invoice and re-raise it because you've missed the PO number. And these are all tactics that clients will put in place to create longer payment terms, which is unfortunate and unfair on the agency because quite often they don't have a healthy cash flow. Hence why we're here, because they're juggling the day-to-day life of running an agency. So I would say on top of the financial risk of your new clients, also think about having a robust credit control process because that will be vital.
Yeah, yeah, no, I think that's really important as well. And I know I've had somebody on the show talking about that before. Oh, Barry Cullen came on and talked about that before, about the better credit control, because that's what
Yeah.
he sees come up a lot. When he's helping people get money back, that is part of where the issue has stemmed from. So it's important to know that. And I didn't think of it about that way before, like the little tactics that people will use to try and get it extended.
And
I
quite
never
often they
even
happen
thought
a
of
day
that.
before the payment's due.
Yeah, yeah, and I mean, my market obviously are recruitment agencies, and I can sense when there's cash flow issues because again, there's this. Well, it's a it's when I say reluctance to pay, they want to pay, but I can, when you sense like it's not there at the moment to do that. So they're sort of
Yeah.
like you said, trying to juggle everything. But usually that, and quite often that could be stemming from the fact that their clients aren't, so it all filters down, doesn't it?
Yeah, absolutely. And it depends how long the supply chain is. Like you say, if you've got several layers there, and it's a bit like buying a house, isn't it? If you're in a massive chain, you can't do anything until the other, part of the chain is complete. And it's a little bit
Yeah.
like that sometimes in a payment process. If you've got several layers in that, your bit won't happen until the previous bit, and then so on. So it's a bit like a domino effect. And unfortunately, it's pretty much always the case that the agency is at the bottom of that line.
Yeah. Yeah. What if because obviously you've dealt with a lot of different sort of situations. What I'm guessing people sometimes come to you after something bad has happened, and they're like, right, that's not happening again. We need to get this sorted this time. What's like the, I sound really doom and gloom now, but I'm just curious, what's been like the worst sort of, in terms of like financial risk, the worst sort of story you've had?
It's got to be the end client going insolvent, and not being able to pay outstanding invoices. This happens quite a lot. So agencies will come to us and they'll say, we've had this really awful thing happen. We put a load of work out to this end customer, and they've gone bust, and we've lost several thousands, hundreds of thousands.
Oh
Um,
my God.
because they weren't insured, which is so unfortunate. But I don't think you really realise the impact until it happens.
Mm.
And these are just the agencies that manage to survive. There will be lots of agencies that we never get to talk to because that
Yeah, because they don't,
awful
that
thing,
ends them.
absolutely, that awful thing has happened. And they can't continue. So quite often what happens is they go bankrupt, and they then go back into employment because they're forced to do so. And the awful thing is the end client, the one that went insolvent and left 100 grand's worth of debt, sets up a new business overnight, and they're absolutely fine. So those are the unfortunate stories that we hear, and it's awful that we hear all of those stories. And I just wish that the agencies perhaps would come to us a bit sooner, and not wait until those awful scenarios happen.
Oh, so the awful
Um,
things happen, yeah.
yeah, because if that was to happen to an agency that works with somebody like us, we would take full control of that situation. We would pursue the end client legally. And if they were to go insolvent, then their outstanding debt would be insured. So they would receive that back from the insurer. There is a small excess to pay, but it's, in the grand scheme
But
of
nothing
things.
compared to what you would have lost before. We've had a question come in. I'm going to bring it up on the screen, but it's a bit of a, oh no, doesn't look as, I was going to say it could be a long one, but it's shown up quite well. So Christopher's asking, how can recruitment agencies balance cash flow management with the need to invest in growth initiatives like tech or talent acquisition? Which I think is a really good question because, especially on the tech side of things, all these new shiny things coming out, and obviously it means that you've got to pay for these things and it's investments. What would you say around that, Vincent?
So this comes down to having a robust cash flow forecast, and you can only do this if you have a good idea when your invoices are likely to be paid. And in the industry that we work in, unless you have a robust credit control process, who knows when those invoices are going to be paid.
Yeah.
So my suggestion would be to have a robust cash flow forecast and a credit control process, and build out a cash flow plan that allows you to put some money aside so that you can invest into things that you need to invest into, such as technology and talent acquisition. Because what normally happens is people have a great plan and they'll put X amount of funds away to be able to invest in certain things, and then the invoice doesn't get paid, or several invoices don't get paid. So things like technology, growth, marketing, business development are the first things to get axed if you haven't got a healthy cash flow. Because you're not going to fold the business if you don't do those things, but you are going to fold the business if you don't pay your suppliers. So my advice would be to have a robust plan and actionable strategy points to be able to deliver a healthy cash flow, which will then in turn allow you to do these things.
Yeah. Okay, right. Before we come to your top tip, I'm just going to give a roundup of the next show to everybody watching. So, and I have remembered to write it down this time because usually I forget.
Is that called a fact packet?
And then it gets awkward, but I've written it down. So I have got David Durant, I hope I've pronounced his surname right, who works for Virtuous Talent as a recruitment consultant. Now, if you don't follow David on LinkedIn, I highly suggest that right now, well, once you finish the show, obviously, you go and find him and you follow him because he is fucking hilarious and his videos that he posts are brilliant. He works in he's a rec. Now, in relation to the videos, he's coming on to talk about how you can utilize video to basically get in front of your target market. So your clients and your candidates, warm up those relationships and basically win more clients and have a bigger talent pool of candidates. He does this so well. Like I said, go and follow him. His videos and the content he puts out there is brilliant. So I wanted to get him on so we can have a really good chat about that. So that is, I didn't write the date down. I knew I'd forget something. Right, next show is the 20th of August, normal time, 12:30. So that's the next show. Right, and coming back to you for your top tip, Vincent, which I think we've already sort of alluded to that, haven't we, with Christopher's question? But your top tip was have a robust cash flow forecast. But I know when before we went live, you were talking about how you were saying this needs to be from the get-go. So yeah, tell us more about this one.
Yeah, so I think it was quite nice actually to bring that to life with Christopher's question. But I definitely think that you should have a cash flow forecast right from the very beginning. Even if it starts off to be a very simple cash flow plan, plot out, the first 30, 60, 90 days. What work are you going to do during that time? When will you be able to invoice? When will you be expecting funds in? So that will tell you how much do you need to invest to be able to run the business to begin with. And if it's not possible, then you might need to reach out to a partner to close that funding gap, to give you a bit of a head start. There's a huge amount of support out there. Definitely make use of it so that your first 12, 18 months, 2 years are strong, because unfortunately, in that period of time, 50% of new agencies fail.
Yeah, that is a massive percentage, isn't it? Massive. Yeah,
Absolutely.
and I think you mentioned that it actually is the logical place to start in a way, isn't it? Because, like you said, it then helps you work out, well, do I need to go and get some assistance? So then you know the next thing you need to do, and that could be going and looking at some options, speaking to different people. It sort of gives you a process, doesn't it? Whereas if you don't have that cash flow forecast done early on, it, like you mentioned earlier, it could be after something bad happens that you then realize, oh yeah, I need to go and get some help. And then sometimes it could be too late.
Absolutely. And you don't want to get to day 30 or 60 of your new business, run out of money and not be able to grow and take on more temps because you're waiting for an invoice to be paid. You want to be able to have the sky as your limit, and not worry about having, cash flow problems.
Yeah. Oh, do you know what? I've actually found this really interesting because I'm not a whiz when it comes to numbers and all of that stuff, but I've just found it really interesting to hear from your perspective, like how agencies can get it right. So thank you so much for coming on. Anybody that's watched this and you want to go back and use it as a resource, it's going to stay on LinkedIn for a while, but it's also on my YouTube channel. So you can go and watch it over and over again if you want to. Vincent shared a lot of info, so it might be one you want to go back and revisit. But I would encourage you to connect with Vincent. LinkedIn is the best port of call, and all your contact details are on your profile, aren't they, anyway?
Yeah, absolutely. Anybody that wants to reach out, if you're unsure about where to start, or you just want a little bit of insight into what does the cash flow forecast look like, reach out, drop me a message or an email. All my details are on there.
Yeah, so yeah, any questions, anything at all, definitely go and do that. Oh, we had Angela Cripps watching today. Thank you for your wisdom, you lovely
Hi,
people. It's
Angela.
amazing how many temp businesses are a victim of their own successes. And that's so true, isn't it? So
Absolutely. Yeah.
true.
This is not a problem that's created from not doing, a very good job. This is a problem that's created from doing a great job, and then hinders the future growth.
And usually unexpected successes that people underestimate how well they might do in their first year, for example. It takes off and then they've got this sticking point. So yeah, it's a really good point made there as well. Okay, we're done. I will see you all in a couple of weeks when I'm back with David. But again, thank you so much, Vincent, for coming on. Definitely everyone connect with him, and we will see you soon. Bye.
Thank you for having me.